Welcome, Pranav. Welcome, everyone. Thank you so much for taking our time on a Thursday evening. And we at D2C Insider Super Angels are super stoked to host these sessions wherein we can sort of bring a lot of to be potential investors go through what it takes. Like Pranav very in the very beginning pointed it out. It's not an easy job, but it's a job that a lot of people want to eventually do. So we're curating all these sessions to ensure that people know exactly what it takes and also get to learn from journeys of some phenomenal investors like yourself. So to begin with, for everyone, I would love to introduce our speaker for the day. Pranav is a seasoned investment professional and a partner at Atrium Ventures, leading investments with a focus on consumer brands, consumer tech, B2B commerce, fintech, enterprise SaaS. He has a background in early stage investing with a lot of angel investments also, and has supported startups across several sectors with deep industry expertise. In addition to his investment work, Pranav has co-authored the book All It Takes Is 1 Year, which we would also talk about in today's webinar, a collection of inspiring stories from ISB that highlight how 1 year of focused effort and right environment can change a lot in personal and professional growth. He is known for his founder first approach and strategic support to early stage startups, particularly in the consumer space. Thank you so much, Pranav, for taking our time. Welcome to this webinar. Would love to know about your journey. I think the first thing that we typically start off is that, especially for you, you've worn multiple hats, right? You've not just done this, you've done multiple things. So would love to understand how your journey has panned out, a little bit about yourself, and then we can deep dive.
Sure. So I'll try and summarize the 31 years of life I've had. Broadly
For the
born,
best.
raised in Delhi. Um, Went to schooling in Delhi only and went to my undergrad in Delhi University. I was there at SRCC. Did BCom, so not an engineer. But I was very interested in startups. So I'm talking about 2015, so a decade back, right? And I think that time we would hear of names like Uber, Ola, OYO, Paytm as the relatively interesting ones. The startup culture was still picking up. There used to be tiny owls of the world existing that time as well. And I just said I want to work in startups. So that's how the journey started for me. Worked for about 3 years before going to ISB. And I think that was a great pre ISB learning experience. After ISB, I was at BCG, did that for about 2 years. I knew consulting is not what I want to do in long run. So I said, okay, I'll give it some time, but I'll bring those learnings back to the startup ecosystem. Worked again with startups for about 2 years. Parallelly started angel investing in 2021. So it's been about, I think, slightly over 4.5 years since I've been angel investing in a personal capacity. Done about 12, 13 angel investments personally. Overall, as funds, we have about 40 odd portfolio companies at least active today. This is across the three different fund vehicles which Atrium has. And yeah, I think the one thing which you'll probably figure from the conversation also is I like to keep things organic. Like this conversation also will be very organic. And so has been my life journey, right? I've been an operator, been an investor. The book happened very organically. So happy to tell more about that. But every day one is learning and just trying to do the right thing.
Yeah, I think makes sense, and I think what also help why we also got you on board for this is because we feel that with respect to Atrium and how your ISB journey eventually led to you being part of Atrium too, right? It's been ISB is all about network. It's about these people who are closely knit, who come together and solve problems, help each other out, etc. And similarly with D2C Insider too, it's a community, and then Super Angels becomes a community led fund, right? So it made sense to have someone who's also building on top of a community, let's say ISB community, and then leveraging that to further grow consumer and different spaces, right? So for everyone who's attending, that's why I think this makes absolute sense. Now cutting directly into your journey, right? So like I said earlier, you've worn multiple hats, right? Though I know which one you're wearing right now, but which is the one that you think is most fulfilling and you've enjoyed the most as an author, as an operator, and now an investor?
So I would be honest enough to admit it is operator. I
Okay.
think there's nothing which gives you the kick more than being an operator. Whether you're part of a founding team, whether you're a founder yourself, and again, I feel like people define operator more just as the founder sometimes. But even if you are just part of a lifestyle business which is not funded, like a bootstrap startup, that itself is a great journey, right? So I think very open to that, and I think one learns by doing. तो अपने हाथ से काम करना ज़रूरी है. And which is why today when we invest also in companies, we are able to relate to what the founder is saying, and we are able to add value to their journey. So that is actually something which somebody had told me while I was at ISB, so 7 years back, that Pranav, either you go down the deep finance route and then become an investor, or you go down the operator rule and then become an investor. So I chose the operator path, and clearly that's what I find more interesting.
Makes sense. Makes sense. Absolutely, it makes, and I think it's very exciting for even founders to raise from funds which are operator led in a way, because then you're not just sitting on the other side and giving insights without having gone to the field and ground yourself. So that's great. Now, any specific thing in your journey that you think has given you a very deep lesson and that you also carry with you as an investor from your operator journey or before that?
Sure. I think the one experience which is less talked about and people catch it lesser, everybody thinks I've worked at Uber, BCG, bigger brands matter, etc. Honestly, there's this one experience which is 1.5 years before I went to ISB, was that I did political consulting. And with that, I traveled to different parts of the country. So, right from the hills in Dehradun to the areas in Haldwani, which is the heartland closer to UP. Then you have the other end of it, which is Chandigarh going all the way to Amritsar, Pathankot, etc. And that gives you a very real perspective of what India is. I think today we are mostly found near Golf Course Road, and that is Tier 1 Alpha India, whatever one calls it, right? Which is a niche. So, just having a real perspective, where does Bharat stand and where does India live? I think it just levels your brain. Whether we are looking at a fintech company, we're looking at a consumer tech company, a consumer brand company, logistics business, it just keeps the thought process very real. Ki, is this even required? Will this work? Will it scale? Where will it break? You're able to relate better to any business because of that reality check which one has. I think theoretically बातें करना आसान है and making a nice PPT talking about TAM, SAM, SOM is great. But I think as an operator investor, we are able to do justice when we talk about reality. So that is the experience which probably affected me most.
Makes sense. Makes sense. So, just adding to that, my next question would be that, um, as an investor, right, a lot of our audience is also going to be people who would want to invest, for example. And you correctly said India is is too diverse, right? So you need to be experiencing it to be able to understand what's going to work, what's not going to work. But at the same time, there's so many startups that come, let's say, in the consumer space, which are very mass first. Then there will be some which are very luxury first. Now, as an investor, you like it's very easy to take a punt perhaps on something which is mass or mass premium, because you know there is a big market, while it people typically get a little finicky and fidgety around taking a bet on something which is maybe a premium, super premium, or luxury space, right? Because that's patient capital, you require patience and you don't know whether it will work because the mass is still not paying that premium, right? So would there be any insight that you would want to give based on your experience as to investors, like what they should look at when they have to decide between, let's say, a mass or a mass premium? And this is typically for people who are doing perhaps angel investing, right? And not of course funds, because there you have multiple people involved. As an angel investor, we may have limited experience to take that punt. So what's your learning there?
See, I think one, it is important to always think as a portfolio. Even as an angel investor, I remember I saw this on a podcast where somebody had said that rule of thumb has to be that you have a 30 company portfolio over a 3 year horizon. That is the one way to think of it. Right? Within that, you can have all categories: luxury also, mass premium also, mass also. Right? So I think one, a portfolio approach makes sense. Two, depending on where you as an individual angel investor have higher conviction, you can bend more in that direction. I may believe luxury is not what I want to bet on, in which case I will go harder on mass premium and mass. But I will be okay with a very good founder building a brand which has high resonance with the right audience and take one odd bet or two odd bets on the luxury segment. Honestly, I was meeting somebody before this as well, and that person said कि इंडिया इतना बड़ा market है कि हर तरह का धंधा बन सकता है, and I truly believe in that. So all these companies can work. It just depends on whether it's a right founder market fit, whether the right founder who understands luxury is building a luxury business, and similarly somebody who understands mass is building a mass business. If वो cross pollination हो जाएगा, that will not work. So very open that way. I think in terms of an angel investor, they just need to think of, are they convinced with the founder? Are they convinced with the space? Is the execution looking good? Is the unit economics making sense? Do they see this scaling up to a level that they will be able to drive an exit out of it? If yes, they should be open to invest, irrespective of which category it falls in.
Got it. Especially in the early stage, right? Because initially it's all about the founder and their conviction towards what they're building. And then the rest of the pieces fall in place. Because, like you said, India is too big a market for almost anything to exist in the long term horizon, right? Sure, makes sense. Now, back to your journey. Would love to know about the book that you wrote and also why the book. Like that's not typically one expects in the kind of journey you lived, right? And what can one learn from it?
Sure. So I think two things. First, why did we write the book? I think it was started as an idea by two friends who are dear friends of mine from ISB, different batches. So four of the co-authors are different batches, which is the beauty of ISB. There's somebody 2020, there's somebody 2023. I connected two of them. They were on a trip. They thought about the fact that ISB has such good stories to tell. Nobody's documented it. They came back after the trip and told me that we want to do this. I'm like, great, go ahead, write it. But they're like, no, we want you to be a part of it. I said, okay, I will be a part of it. And then they said, okay, we also want an alternate point of view, a creative point of view. Three guys were fairly uncreative, so we figured Juhi, who is genuinely a musician, creative person, big on marketing, and we said, okay, this will bring an alternative perspective. And that's how four people came together. We started writing the book. In terms of people, there is no shortage of good ISB alumni. So we featured roughly 25 people, but there are many more actually which deserve to be featured. So this is not really like top 25 or Forbes 30 list. Basically saying this is a representation of the diversity ISB stands for. And then as we did those interviews, right, we went deeper into not just their success but their failure as well. What are the learnings? Because I truly believe one learns a lot more from failure than they learn from success. So we made it a point to ask each of those 25 people, what are the failures you experienced? How did you bounce back from the failure? And what is your learning in the journey? Right? So सबकी अपनी story थी, and I think which is what the beauty of the book is. I have read it probably three times till date, end to end, because the proofreading and editing I did. But I'm happy to read it even today because I know every time you read a story, you will take away a different point because each of them has such rich journeys, right? Somebody is a journalist, somebody is running a not-for-profit, somebody is probably a CEO of a company. So very different learnings are there, and one can take away. And we've kept it very non-filter. So if you see the language also is very plain Jane. Anybody can understand it. We consciously said it will be less than 200 to 50 pages so that anybody can read it in a flight also. And yeah, I think everyone asked us when are you launching the next, and we said we don't plan to after a few years. And somewhere this was also coinciding with about 20, 21 years of ISB. So we thought it might be a good way to commemorate the journey of ISB. And yeah, I think it's great to see people enjoy that book.
Great. Can you perhaps quote one of the failures story that you think really will resonate with, let's say, an early stage founder, because they see failures fairly more often than regular folks would.
Fair question. I think there are the fair share of failures people have. Let me give an example. So Akash Chaudhary, everybody knows him as Akash Chaudhary, who's the son of the promoter of Akash Education, and somebody who had $1 billion exit, and somebody who bought 100 crore land properties in Delhi. But his journey is before he went to ISB, much before he got into the family business, before taking it to the stage it was, when he was, I think, 23, 24. So he's had multiple failures, and this is something he quotes often. He's like, my father was teaching the world to do medicine. His elder brother is a doctor. He's like, I took medical as a line because of that. I went to college. I immediately realized that I can't be near an operating theater because he's like, I see blood and I am not able to operate. So he's like, I shifted to engineering. He's like, that was the first failure. That somebody who's teaching the country to get into medical entrance, my own son is not doing medical. Second, he's like engineering में चले गए, got an average job, got out of it. But after some time, I started my own venture. So he had a media business actually. He was into advertising and printing back in the day. And it was a B2B business. And he's like, one of my clients didn't pay. And there was a significant amount of money, like a full page newspaper ad, and the money didn't come. For a small agency doing that business, it meant life or death. And then
Absolutely.
in 6 months, he shut down the business. So he said that was the second failure I experienced. He's like, thankfully, I was in a position that I could go to a MBA institute, get the degree, and say that, okay, I will learn to do better. Then I got out of it and then I started building Akash. So I think that journey was very interesting. Give me an example also. I remember the conversation vividly is he was studying at ISB. So we have a ton of exams every month over there. So he's like, I failed in one of the exams, for example, or got a bad grade. He's like, I was feeling bad about it. So there is another person whose story we featured, Kulmeet Bawa. Till recently, he was, I think, the APAC head for SAP. So he's a army veteran, and they were both the same batch at ISB. So Kulmeet told Akash, कि देखो, why are you upset? He's like, because I didn't do well in this exam. He's like, so what? Matlab, this is hardly the failure you are going to be disappointed about in life. And then Kulmeet had his own story, right? He's like, I was posted in Kashmir as part of the army that time. There was infiltration that time. He's like, I remember a moment I'm sitting with my team, Paltan, so to speak, and having a beer sitting in Srinagar in the outskirts. And he's like, suddenly there is an attack. By the time he's like, I rush out, somebody in my team is shot. He's like, within 15 minutes, somebody I was having a beer with, who's in my team, who's a close friend, is no more. He's
Wow.
like, that is what you need to understand is failure and grief. He's like, but in that moment, what did I do? I accepted that and I moved on. Like, you can't stop.
Right.
And which is what I think Akash felt like it resonated with him. And what are we even sad about? What are we even calling failure?
Yeah. So I think perspective really helps, right? Like in the bigger scheme of things, and knowing that there's so many people, and if you like just put everybody in a perspective, you might just feel at that point that, hey, listen, this failure is not something that's gonna really change a lot in the long term when I look back at this point in time. So yeah, all right. So sounds like an interesting read. Surely I'll pick it up. All right. Now, would love to know that um, how has uh, Atrium, like I said earlier, has the entire ISP network at the center of it, right? So how typically Atrium has been able to leverage the network in the investment journey that you've seen so far. So like your investment journey, if not Atrium, like how have you been able to leverage community?
Fair. So I think nothing was by design. We figured it on the go. The good thing was ISB has been and is today and hopefully will remain a warm community. We're warm towards people within the community and people outside the community also. So even today when ISB interviews are done to select the new batch coming into the institution, it is done by alumni. So I have sat in those interviews as well. And we are not checking कि किसी को maths कितनी आती है या English कितनी आती है. We are checking intent. We are checking character and whether this person will give back to the community or not. And that makes a big difference, right? So that culture of giving back is constant. So it goes in multiple shapes and forms. So when we attempted Atrium, people were very kind. They not only trusted us, they invested in it. Um, they referred other friends who invested in it. And there are multiple incidents where I can give an example of one person bringing four investors, one person bringing another three investors. And the trick is, let's say we have another fund, Consumer Collective, they have invested in that vehicle also. So maybe 25% of our investors are investors in Atrium Angels and in Consumer Collective. So there is an overlap that way as well. So they trust through and through. They know that nothing wrong is being done. Return kitna banega, result kya hoga will be seen. And that is the faith they are putting in us. Same goes for founders. We've seen them that I was talking to somebody recently. This example is from 2022 when I was not even part of Atrium. A company called Cashflow, which is based in Mumbai. And Ankur Bagheri, as a founder, who raised capital from Elevation and the likes of General Catalyst, we put a very small check. He ensured that we get that 50, 75 lakh allocation, okay, because of the ISB camaraderie. So that meant a lot to us.
Right. Makes sense. Makes sense. I think that's been a similar learning with Super Angels also, right? Wherein just a WhatsApp group, eventually people who had been founding team ended up saying that, yes, we want to be part of the fund and we want to be backers, right? So that we've seen. And I think people are more than happy to even come. And it's like just a call away, right? So if any portfolio has any issue, you just connect them with the right people. So that also helps a lot. Got it. So there, that's where a similar community level synergy is there. Now, um, how do you typically like? Sometimes what people also think while investing is that some people wear just a financial investor hat, while some people may feel that, hey, I would want to be more hands-on, right? And some people would want to put in the check again from an angel lens, would want to put in the check, but are a little wary of, hey, I don't want to be like heavy lifting, like what would the founder expect from me? So typically you've seen a lot of founders also, right? Now, from an investor, what should an angel investor ideally think from this role, right? Like, I've put in money, but what else should I bring to the table which is not very intrusive and not in a way that it really rattles the founder that, hey, listen, I'm calling every fortnight and saying that what's the number, etc. So what should be that boundary that should be set, and what's the kind of JD, if I have to say that?
Sure. So I'll probably think of it the way I interact with some of the portfolios I have invested in a personal capacity. I'll take that
Sure.
example, right? It's a very clean relationship. They ask me to sign on a document for compliance, it is done. There is no discussion. Um, if they want me to exit the company, I will exit the company. If they want help, I will provide the help, whether it is hiring, branding, BD, partnerships, fundraising, debt, everything is available. But when somebody asks, don't push, like you said, don't be intrusive about it. I don't need to do a conversation once a quarter. It's fine. Matlab, if the founder is diligent, they'll send the update. If they don't send the update, it's fine. It will also happen. But as long as there is trust on both sides, it's okay. And even if I catch up with the founder once in 6 months, it's okay as long as they are respectful enough to give me the answers to the questions I may have. For example, last week I was traveling, somebody messaged one of the founders in whose company I've invested. He told me another friend of his is starting a new venture, I should advise. So if you are doing right by your founders, they will become your evangelist as well. जो हम डील पाइपलाइन की बात करते हैं वो बेस्ट डील पाइपलाइन फाउंडर्स ही रेफर कर देंगे, right? So our formula, even at Atrium at a fund level, is we will not push you. Quarterly update, it's good enough. Beyond that, if you need any help, you come to us. You can confide in us. You can bitch about your lead investor. I have no problem. Your company is sinking. Tell me about it. It is fine. I will not judge you. I will honor the relationship I have with you, which is I will tell you what is the right thing to do. The right thing to do. There is an example where in one of the angel investments I made, I told the founder, shut the company. Right? And I said, it's the best thing for you. This is a young person, 25, 26 year old. I said, shut the company, go do a job, attempt it again after 5 years if you want. Nobody will have a problem. Like anybody who's an angel investor understands the risk of their investment. It can fail, it does fail. And hence it's important to build a portfolio for an investor. And as far as the founder is concerned, ठीक है मतलब कोशिश करी नहीं हुआ. As long as they tried their best in good faith, it's fine. It's a different thing. The founder didn't take that advice. He ended up struggling for 6 months and then took the advice. So yeah, that's the journey.
Got it. Got it. So, makes sense because there are other ways to also do it, right? Like wherein if you feel that you would want to make a certain. So the first thing that you said was that there should be a portfolio approach in the earlier question, right? Which makes sense. So either you can build that portfolio yourself as an angel investor, or you eventually become part of a bigger, let's say, a fund wherein you trust the people enough to be able to do that portfolio management for you, and wherein, of course, you should be also able to add value whenever the founder calls for it, right?
Correct.
And unless you're a lead investor, wherein also I feel that there should be certain boundaries so that you're investing in someone who is supposed to break the mold, right? So you cannot put them in a mold, then that is counterintuitive. Uh,
Correct.
Got it. Now, if I would want to go a step back, right? A lot of this depends on that one key thing, which is networking, right? Now, either you're already a part of a community like a D2C Insider, or you're already with ISB, but a lot of people are not perhaps in an ISB to be able to network with the right kind of people to get access to a fund that you're building. And a lot of people are not even comfortable perhaps in that entire networking part of it, right? A lot of founders, for example, I see are introverted. If they struggle with even they have to get through this mental barrier of going to market, right? Similarly, there are so many investors who feel like they're sitting on money, want to make the fund, but don't have that network, don't know how to build that network. So, do you have any suggestions or any tips that you'd want to give to both sides on how to really ease this process of networking for any end goal?
Fair point. So I think one thought came as you were explaining this point is it is okay. Everybody does not have to do networking. I think that is one part of the answer. Second part of the answer is find the person in your first, second, third degree network who is good at it, right? And again, my worldview, and I've maintained it over the last 7, 10 years. A lot of people have asked me about networking, and I said, don't do it for the sake of it. The best ones are where you do relationship building, where it is a meaningful relationship. Those relationships are long term. Relationships compound in life,
Yeah.
be it marriage or any other relationship, right? So I think it's about knowing the right person who has these sort of relationships. For example, in case of D2C Insider, Abhishek is there. If you know Abhishek, he will take you to the right people. So you need to find the right champion for you. आपको जाके 10 लोगों से बात करनी है नहीं ओके तो बताओ which five are relevant for you. So I think that makes a lot of difference. And I've seen it with founders, right? The first time it is hard, but the first time they've done the round with 10 people, they know how to talk, they get comfortable, they are at ease. The second time around, they do it better than us. The founders are smart enough, business चला रहे हैं तो उनको बात भी करनी आती है, deal भी करनी आती है. They'll figure it out. And I think, yeah, even generally, if somebody says, कि अच्छा, as an investor, मेरे को networking नहीं आती, then what do I do? I think it's okay, give it time, you build your network over a period of time. Second is pull factors. If somebody is good at writing, write content on LinkedIn, let inbound come to you. Writing is not your style, you want to do video content, do video content. Or if you think you have a deep insight about something, make a PPT, publish it as a PDF on LinkedIn, let people come to you. So all those ways work to solicit the right deals. Lastly, I think ASB थोड़ा हमने ज़्यादा hype कर दिया है, But more than that, like personally, we've hyped it a fair bit. But there are every community is valuable, right? For example, my undergrad SRCC has produced great consumer founders. Assembly being a portfolio for D2C insider as well, right? So वहाँ की भी एक community है. I worked at BCG. There are a lot of alums coming out of BCG who are now becoming founders. That's also a community. So each one will have at their level, right? Uh, so look for opportunities to create communities. I recently spoke to somebody who was building that community for Bits Pilani, right? तो IIT दिल्ली के लिए कोई बना रहा है तो it can be at an institution level, company level, qualification level, CA level, etc. So creating those communities can go a long way. So I think that is something one can attempt as well.
Got
Find niche communities. Yeah.
Got it. Got it. Makes sense. So, either if you're very uncomfortable, find the person who's got the network. Second, if try, like that's what you do as founders or as investors, right? First time won't work out, second time, third time, maybe it'll work. And third thing, it compounds. So you don't have to like go to a networking event with 100 people and then talk to like 30 and then remember 20 of them. It's a slow process. It'll add. And fourth is build communities in niches, right? That's what you're suggesting. All right, makes sense. Now, okay, I've done that. I've got a network, but then still some people struggle with sourcing a lot of good deals, right? So, how can you suggest some practical ways to source quality deals in case you today don't have a very large network?
See, I think there are two, three things over there. One is what does the individual aspire? Do I aspire to become a full-time investor in life? Then do the whole hard work of building a pipeline. If you are not, then subscribe to syndicate. Be part of investor groups. Be part of a platform. Works very well, right? If you think, okay, I have a chunk of capital, put it in a fund. Let the fund manager do the effort. It's like when it comes to public markets, I'm not sitting and picking stocks. There's a wealth manager, I've parked my money with him. It is his job to tell me where to put it. I have told him I don't want to do stocks, I'll do mutual funds. Similarly, you pick a fund manager saying I want to do early stage or growth stage. Yeah, pre and then accordingly allocate capital. But let's say you want to be engaged somewhere in the middle. You don't want to be passive, but you don't want to just do everything on your own. So you are in the middle. Syndicate वाला option अच्छा है, where you can actually pick the deals yourself, but you get access to quality deal flow. If somebody says नहीं मेरे को actively deal flow बनाना है, I want to have my own pipeline, then I think just going out there, putting content on LinkedIn, talking about the early investments you've done. If I talk about my early investments, right, some of the logos which were featured in the creative, which was prepared as well. These are my ex-bosses, friends from Uber, people who I have met through my friends, so mutual friends, so to say, and those become your first bets. The first bets are very important because you learn from it. पहली चार पांच कंपनी में आप पैसा लगाओगे सीखोगे कि what is working, what is not working, what is the type of founder I want to bet on, कब आना चाहिए, प्री रेवेन्यू आना है, प्री प्रोडक्ट आना है, पोस्ट रेवेन्यू आना है, VC के साथ आना है. You make all of those decisions, and that slowly converts into a personal investment thesis. So that is again something which people need to figure. First, you get your investor goals aligned, investor thesis aligned, then figure how to fill that pipeline. तो पाइपलाइन पैसा देना बहुत आसान है, पैसा लेने के लिए बहुत लोग हैं. इट्स अबाउट फाइंडिंग द राइट पीपल विच इन माई लर्निंग हैज ऑलवेज कम थ्रू रेफरल. तो आप पहले चार पांच करोगे उन फाउंडर्स के रेफरल पूल से या तो कुछ मिलेगा, आप किसी और इन्वेस्टर ग्रुप के साथ करोगे. देयर इज नो पॉइंट इन्वेस्टिंग अलोन. इट्स ऑलवेज गुड टू इन्वेस्ट एज अ ग्रुप, which is why you have four five like-minded people. Everybody brings their networks. That's the value.
Makes sense. This is really helpful. I think this will solve the problem for a lot of people. Now, the other bucket, right? If, for example, I decide that I don't want to do deal hunting myself, so I don't want to like go and find those referrals. I'd rather give it to a fund manager, right? Then and then what should be it that I should be looking at the fund, right? What should be the metrics that I should judge whether this is the right fund manager for me or not?
See, again, I think it's similar to mutual funds or any other AMC or any fund. You need to take the bet on the fund manager basis things like what is his track record, what is his or her investment style, um, what do founders have to say about the fund manager. If they have good things to say, means tomorrow they will get the best of founders. If you have a good track record, means that the person has the eye for a financial return. If you understand this person is aggressive and you are conservative, it will not work. But if you are also aggressive, the fund manager is aggressive, then your thesis is a match. For example, there are sometimes investors I have spoken to who are very aggressive. कि हमें 40% IRR चाहिए. So I'm like, maybe I'm not the right person for you. मतलब, if you're not going to be okay with a 30% IRR, let's not go ahead with it. It's fine. आपको कहीं और मिलेगा. आप जाके माइक्रो नैनो कैप्स में पैसा लगा लो. There are sometimes people who are pure financial investors. There again, I feel like they may not have the appetite for the losses which come or the illiquidity involved. So there again, I tell them it's fine. You go ahead, put money in the markets, no problem. And I think that is how you get the right kind of investors to you as well. So from a fund manager perspective, that's how I think. And as an LP also, I think these are the basic hygiene factors. What is their temperament? What's their team? Is there a strong enough team behind the fund manager? A person alone can't do everything. So all of those things matter. Think of the fact that do they have proprietary deal flow? कि जो डील इनके पास है क्या वो सबके पास है? अगर वो है तो फिर शायद इतना इंटरेस्टिंग नहीं है फंड में पैसा डालना. बट जो डील इनके पास है वो सबके पास नहीं है मीन्स इट इज इंटरेस्टिंग. And are they seeing follow-on rounds happening? So when we talk of track record of the fund manager, you will look at acha, like I spoke to somebody who's an investor today. He said, okay, we've invested in 25 companies, eight of them have seen up rounds in the last 12 months. Then you know you're evaluating them on up rounds. But if you ask me, an even more real metric is distribution. क्या है पैसा निकला कितना. अगर 100 रुपए लगाए तो 50 निकले हैं कि नहीं. अगर 5 साल बीत गए लेकिन 30-50 भी नहीं आया फिर तो प्रॉब्लम है. So I think being okay with that. And another factor related to that would be your time horizon. Am I okay with a 10-year horizon or do I need a 5-year horizon? Is the fund manager thinking on the same lines or not? So I think those things matter.
Yeah, yeah. Thank you for covering the time horizon because that's what I was just getting to next, right? Because a lot of it is depends on this. Like for example, consumer may the time horizon is going to be very, very different from say, let's say tech,
Correct.
right? Understood. So there are a lot of questions that are coming in. Let me just quickly pick them up also. Right. So there's one question at a portfolio level, what should be the expected IRR from a fund or if we are investing individually in a startup? So I think you partly covered that, but if you'd want to take it up.
Sure. See, I think there are two answers to it. One, we can always look at SEBI. They publish data about Cat 1, Cat 2, Cat 3 funds, within which IRR benchmarks are mentioned. So you will see the name of the fund, you will see what return they're giving, what their DPI is. It will help you get a sense. I think 30 to 35% IRR is a very good number. So there are people who say कि नहीं 20% तो मेरे को मार्केट से मिल रहा था तो करीब 40% तो बनना चाहिए. I'm like ठीक है बन सकता है but I'm not promising it. Nobody can promise you fixed returns when it comes to startup. I think as a fund, at least for us internally, that's the benchmark we work with. 30 to 35% IR is a good number. Was there a second part to the question?
No, this is it.
And even individually, if somebody is investing in startups, the benchmark remains the same. The only difference will be when you think of it from a fund perspective, it has to be factored in as net of carry. So if 20% of your money goes in carry, so you need to look at what is the IRR net of carry instead of looking at the gross IRR.
Got it.
That's the
Got it.
only difference.
Got it. Okay, so you've mentioned if someone asks you to exit, you will exit. As a financial investor, you need to stay on well doing company for longer so that you can recoup your losses. How do you manage this when you are faced with such situations?
Agreed. I don't think um, I, I'll give an example, right? There is a company which offered the secondary to me. I said no. And they came back and said, genuinely, we are offering it, nothing to be shy. We want to take the money, take it out. I said, okay, I'll take it out. But Had I been sure that this company is going to do 3x or 5x more after this, I would not have taken out the money. So I agree with your point. If your company is doing well, you hold it in. For example, one of our portfolio companies, Judgment, is doing very well, right? It's already at a 4x, 5x right now. Another 12 months, we know it's going to be at a 8, 10x. That's the time we will want to take some secondary exit out of it. The other reason I feel it's okay to take exits, you can do part exits. आपको full exit करने की जरूरत नहीं है. And secondary markets में, private markets में क्या होता है, you never know when liquidity is there. आज liquidity है, कल नहीं होगी, because वो buyer का mood change हो गया, उसने पैसा public market में लगा दिया. So hence it's important to balance your liquidity and exits along with your return and upside. And of course, a founder should never bulldoze any investor to exit. So if
Yeah,
you are experiencing that from the founder, it's wrong on the founder, and hence it is important to back the right founder.
that's the learning part of it.
Yes,
Got it. Can you talk about three advices that you've given to a company and it really made a difference in the portfolios?
sure. So I think couple of things. Now there are different points of advice, right? One is we like the company, but the company is stretching around. We've tried to guide them on how they should structure the that has also happened. Two, they have multiple term sheets and we have advised them on who to take money from. And that has changed the trajectory of the company as well. Three is the company is looking for debt funding. We've told them whether to take venture debt, whether to take a bank loan, and that has also changed the journey for them. Fourth is sometimes where companies are looking to exit. If the founder is tired, wants to sell. This is a real situation today where maybe by tomorrow we are signing a document for an acquisition of a company. Distress sale था कोई बात नहीं. We said do whatever is in best interest of the company, team, founder, and investors. So we figured out some terms and we are going ahead with it. So there again we were able to give sane advice. Otherwise today that company would be facing bankruptcy versus 2 3 months down the line if things go as per plan, DDs are clear, everyone will make money on it within 6 months. So advice can come at different time, shape, or form. I think I personally I feel like I'm still young. I don't have the position to give a lot of advice to some of these founders, but we have founding advisors who we refer them to, and they give them good advice. Right? There was a company, for example, I'm not naming the company, but XYZ company was there. They came to us with an idea. And one of our funding advisors said, it's a bullshit idea. Don't build it. Of course, it was hard feedback, but the founders went back to the board, came up with another idea, started building it, raised one round. Then, by the time they came to the second round, is when we invested. And the founder obliged because he knew that, okay, had somebody not told me that it's a bad idea, I would have still been building it and struggling. वो अलग बात है कि उस फंडरेज सेकंड फंडरेज के बाद the company is struggling today, but at least direction of the company was set in the right direction because of the advice. So advice can happen at all these levels. There is a portfolio company, and I'm not naming it right now. It is a company which D2C Insider also knows of, where one of the co-founder moved on. And when I had met the original founders, I had told them the third person should be out. But it was very subtle. So when it happened organically, but it was still good advice. So advice can happen at all times.
Got it. So this arises a question in my head, that as an investor, how do you actually balance giving advices, right? Like sometimes you'd want to give a very hard advice, which is like you said, bullshit idea, right? But you cannot say it like that. Versus you when you see you cannot be all goody about it also, right? Okay, nahi, it's all working out. All right, let me just not, I will not put in a check, someone else might be, but great idea. Because that can also mislead and that can also waste a lot of time, resource, energy of the founders, right? So
Yeah.
how do you actually give the right advice and is there a science behind it?
I don't think there is a science behind it. It is more art. There's one thing, there's a partner at BCG who's moved on now, Seema Bansal. She told me after a client interaction with a senior IAS officer while I was at BCG, and she's like, sometimes a hard conversation has a lot of theater to it. So, as part of that theater, what happens is you don't need to say yes all the time because you want to be liked. You have to take a firm stance and talk business. So, what we tell founders is you need to detach yourself. Don't make it personal. It's about the business. It's not about you, right? With regards to the business, objectively, these are the gap areas. It is up to you to fix those gap areas, take a pivot, continue doing the same thing. The call is yours. But we are just sharing our observations. So
Got
we
it. But does
still
it
go
get
ahead and say
tricky?
it. Yeah. Sometimes people
But does
don't
it get
want the
tricky?
feedback. Yeah.
Yeah, that's one, but does it get tricky also around founders? I've come across some founders who are very, very deeply passionate about the product,
Yeah.
right? Which may not be ripe for the market right now. Maybe it's great for another market, another time. But then it's very difficult for the founders to also dissociate themselves from, because they feel that they're part of it, right? It's them, it's their passion for the product.
Fair enough. In which case, it is that I, as an investor, may not be able to invest in you. You, as a founder, can still go strive with it. Either you pivot, you evolve, you get the funding, good for you. If you don't get it, maybe in 6 months, 12 months, you will realize that I should be spending more time on it. Put it in cold storage. I just feel time is a big factor. जो चीज़ एक बार में
Right.
से हो जाए टाइम समझा देते हैं.
Right, makes sense, makes sense. So there's a question in the chat. Tresnova is an eco-friendly, chemical-free kids innerwear and sleepwear brand. For such a consumer D2C brand, what key three milestones should be included in the roadmap for the first year? Um, Currently, major sales from marketplaces and 10% from own website. Basically, the top three metrics in the first year that early stage innerwear kids brand should do.
One is, of course, you need to show revenue growth. Two is you need to show that there are decent margins in the business across channels. Three is your ability to build a brand. Four is the fact that you are tracking your user data or your consumer data by seeing, are you seeing a trend in terms of power users? Do you see a geographical trend evolving? So customer cohorts. These are three, four things I'd say. Revenue growth, unit economics, understanding your cohort data, and the fact that are you able to get any kind of repeat users in the process. So those are the hygiene things one looks for.
Got it. Makes sense. And from a channel standpoint, would you have any advice?
See, I think if somebody is doing majority from marketplaces, it depends on the category. Can the category be done without the marketplace also or not? I think personally, we don't have a high liking for brands which are very heavy on marketplaces. Brand key value has to be standalone, and hence from the own website we want to see more. But we understand in the first year of business it may not be that easy. And in a category, if you're trying to do something new, it may not be that easy. So there could be factors, but as long as you know that you're able to keep a balance between marketplaces, your own website, it is okay. But it should not be just dependent on marketplaces, and within marketplaces also, you should not be stuck to one marketplace. Ideally, it should be a hybrid across two, three marketplaces. Now there is quick commerce, there is e-commerce. You combine that, you have four, five platforms, certain risks to business, so to say.
Got it. So you mentioned quick commerce, right? So typically, do you have any advice for investors and brands too? Brands from a lens that should they be totally indexing on quick commerce, right? Because there are a lot of brands that come up and they become really big really fast on quick commerce, but that's just like one channel, and perhaps they might be just on one of the QCs for an initial phase, right? And for investors, should they be there's always this tug of war between the kind of multiple valuations and etc, right? So a, should investors be looking and deeply analyzing such startups where in quick commerce they're very very heavy on quick commerce, and if yes, are the multiples similar for let's say, a quick commerce heavy business versus a D2C heavy business?
Got it. I think for D2C, one will be happy to give some preview. They're D2C heavy. For example, one of our companies, House of Chicken, they do a lot of business from their D2C channel versus marketplaces. So I think that is a positive for sure. But at the same time, I would say one cannot discount businesses which have a chunk of it coming from marketplaces. It is okay as long as it is spread across different marketplaces. And two, I think to your question about quick commerce being the only channel new companies are focusing on, I don't think we look at that very favorably. We think it is important to think of it नॉट कि अच्छा इस चैनल पे बिक रहा है बिकॉज आपको पता नहीं है वो चैनल आपको कितना स्क्वीज कर लेगा कल को आपको ये नहीं पता है दैट द चैनल शट्स यू डाउन
Yeah.
then what happens, right? I'll give an example. So there was a company back in the day called Witty Feed. They used
Hmm.
to be on Facebook. They put everything in their business on Facebook, and overnight Facebook shut them off. So the business went to zero, which is why the founders later went on to build Stage. Why?
Yeah.
Because they said we don't want to be dependent on a foreign platform,
Yes.
and they build their own platform. I'm not saying you go and build your own platform, but I'm saying de-risk it by looking at different marketplaces and having a direct channel as well. Go ahead, do a corporate order B2B as a segment also. वो भी चलेगा, but balance it.
Makes
I'm
sense.
a more conservative investor.
Makes sense. Makes sense. And yes, in early stage, it's always a founder bet, right? So since you mentioned Witty Feed, Vinay,
Yes.
Stage, Abhishek is an early investor in Stage, and that has been purely a founder bet, right? That commitment comes that the founder will figure it out. All right. So next question is, if a startup is restraining increase of a budget to improve operations and other debts to decrease the debts, is it a red flag? Okay.
No,
Basically,
it's not a red flag. I think if that is what the business needs to do, that they need to manage their costs, then by all means the business should be doing that. I would rather feel that the founder probably has the business acumen and the willpower to actually make the hard decisions. So I have personally hired and fired a lot of people, and firing is never fun. Though at a point I was firing a lot of people, and my wife thought I was enjoying it, but that was not the case, right? I think it's not never easy, but one is got to do what the right thing is.
yeah. And I think in building, for most startups, that cockroach phase always comes, right? When you really need to restrain your costs. And like you said, so it's more often than not a positive indicator. Yeah.
Agreed. I think positive for sure, and cockroach startups is what I like to see. So there will
Yeah.
be companies in my personal angel portfolio. Umang, who's associated with Karthik, was recently asking me what are the kind of companies I like. I'm like, I
Hmm.
like the unsexy ones, maybe low tech. They could be as well as B2B businesses. I'm perfectly fine with them because धंधा तो है ही है.
Right. And I think in consumer space, in D2C space also, what is happening is that you need to have that kind of resilience because today the kind of CACs that there are, if you go head on with everyone at this point in time, you die sooner than you would imagine. So it's better to be very build sustainably, right? And while you're building sustainably, even then there'll be certain dips and certain knee-jerk shocks coming from the market which will make you do these things, right? So it absolutely makes sense. All right, now the next question is, if I have invested over 4 years in multiple startups, how should return distribution look like? When should I start expecting, and over what period should I expect to get capital returns?
Fair question. So you think invested over 4 years in multiple startups, how should distribution and when should I start expecting and over what period should I expect? See, typically I would say if you've invested the amount over 3 to 4 year period, any startup to give you a meaningful return takes about 2 to 3 years. So at a portfolio level, I would say from the day you started doing your first investment till year 5, 6, 7, you should be open to returns coming. Second, what should the distribution look like? Ideally, if you put money in 10 companies, then two would have maybe died. If they're alive, then great, because that means you're doing some good investing or you've done very average investing. One out of the two. Um, but two to three are likely to die by the time the exits happen. One or two might just barely return capital or give you the interest as you would have put it in a fixed deposit. Then maybe one or two companies will be the outliers for you. The whole game is about building for outliers as per power law, right? So as long as you have two to three companies giving you either 5x, 10x, 3x, which helps you make up for the rest of the losses, you are fine. If you look at best of the funds like Bloom over a 10-year period has given a DPI over a period of time of 1.2x with a TVPI, which is the value remaining to harness up to a 2x. तो I would say अगर आपका 4-5 साल में पैसा दोगुना हो रहा है, it is okay. I think you've done a decent job while doing that. You also need to understand that it's not कि जैसे स्टार्टअप में पैसा लगा दिया हाई रिस्क है तो हाई रिटर्न हो जाएगा. The other thing to understand, which people who've been doing private markets for a long period of time globally understand, is it is risk diversification, right? और asset diversification. आज पब्लिक मार्केट डाउन है यूएस में, उसका रिपल इफेक्ट इंडिया में हो रहा है, बट शायद प्राइवेट मार्केट आपको बचा लेगा,
Right.
right? You never know what works for you, but yes, you can always keep like a 5% cap, that of your total net worth 5%, maybe 7% can be private markets, not more. So that is again a number to keep in mind.
That's a good number. That's a good rule of thumb. I hope that is answered. Okay, another question is, how is investment philosophy different for Atrium Angels and Atrium Ventures?
Fair. So I think Atrium Angels is a fund focused on ISB alumni founders, um, and that we maintain across Atrium Angels Fund 1 and Atrium Angels Fund 2. We are sector agnostic and we do pre-seed seed bets. In case of Atrium Angels, we've also done pre-series A, Series A bets. Whereas in case of Atrium Ventures, we are very clear it has to be pre-seed seed. Exceptionally, we will do a pre-series A. We started out as more sector agnostic. Over a period of time. We realized B2B, fintech, and consumer tech is what we like, and it is also a factor what we can underwrite. जो हमें समझ आ रहा है वहीं पैसा लगा सकते हैं. Fintech has become an increasing interest over a period of time, given that we've set up Consumer Collective as a separate vehicle. So consumer investments happen towards that. And B2B currently may not be the flavor of the market when it comes to investors. So we may be going a little easy on that, but going more bullish on fintech. So that's the difference in thesis. And yeah, I think in terms of checks which we are putting, it could range from $100,000 to $200,000, but that's on average.
Great. Awesome. I think we've covered all questions. I have a rapid fire question. I have
Uh,
many, but in I will just ask one.
okay.
What is your biggest regret as an investor? Is there any?
Uh, no regrets. I would say so. No regrets. A learning for sure. When I started angel investing, the first 3-4 investments I made, I did with a venture builder. And there what I realized was these were mostly pre-revenue, pre-product companies, concept stage, and that I don't know whether it is always the best bet for a angel investor just starting out. Second, I felt while I picked the right areas, the founders were decent on paper. Um, I never really interacted too much with the founders personally to build a point of view. So, मतलब I attended a session where the conversation happened, but I was not very strongly clear about the founder. Versus जो मैंने बाद में angel investments करी at a personal level, where I knew the founder, I was sure कि ये सही कर रहा है, मेहनत करेगा, बनाएगा business. There I've seen better returns. So yes, index of the founder, and don't do pre-product, pre-revenue bets unless you're sure of the person. And if you are doing those bets, try and spend time with the person. And ideally, I feel venture studio models become hard going forward when you're looking at success, because if somebody taking 15% of your company on day zero, it somewhere demotivates the founder to kind of build forward. Right? So I think there are people who are taking 30% as a venture studio as well while putting in capital, and that's okay. But उसमें फिर issue आ जाता है. So personally, I would think twice about venture studio models and pre-revenue, pre-product companies as an angel personally, unless I know the founder well.
Got it. I think very, very valid point, because here at Super Angels also what we typically do is that we take early bets, right? So somebody who's doing 5 to let's say a 50 lakh MRR of sorts, or higher depending on the conviction, or sometimes lower also. But at the same time, what is important for us is we also run an accelerator called Elevate, right? So we what we try to do is we first have a cohort of Elevate, so where we have about 20, 30 start. You cannot have so many conversations with everyone and have multiple levels of conversations with just one founder, right? Because early stage mein aap kitna deep ja paoge with multiple folks. So Elevate becomes a channel through which everyone goes through it, and by the end of it we figure out that okay, these, like, it's a 3 month rigorous cohort, right? So by the end of it we figure out that these are the 5 people that where we can take a bet, and then you go deep with them, and then you're able to ensure that that check that we're putting, because we put about 1 crore of check size. Our check size are really small. The idea is to get an outcome of a 3 crore at least of with just 1 crore. And so the skin in the game is also not a 15%, up to a 8 to 10%. But through the accelerator arm, we're able to like do the